What is interest? Money is usually not lent to someone for free. Banks, governments, businesses, and others, like even an individual, can lend money to someone, but they expect to be paid back what we call interest. So interest, it is the money paid by a borrower, by the borrower, to a lender. And it's based on the amount that's borrowed, the amount of time it was borrowed for, and the interest rate, which is a percentage value. And we'll look at some more examples later so that we actually add some numbers to some of these different variables. So at the end of a loan, the borrower would have to pay back the money that was borrowed plus interest, which is based on those factors that we talked about. So we just defined interest, but there's a few other vocabulary words we need to get straight before we jump into bigger conversations about interest. So a couple of important words. The first one we'll go through is principal. So principal, this is the amount borrowed or invested at the beginning. So for example, let's say you invest in Microsoft stocks and you invest $1,000 in Microsoft stocks. Maybe next year, those stocks are worth $1,200. Well, the principal was that beginning amount that was initially invested. Or in the case of a loan, it's that initial amount that was borrowed. Interest rate. This is a percentage of what was borrowed that the lender charges, or from the investor's side, the investor earns. So a percentage of what was borrowed that the lender charges or the investor earns. And lastly, it's kind of a silly one to define, but time. This is how long the loan or investment lasts. To start with, these are the key vocab words that we need to talk about investing. I want to talk about what interest might look like for you. So you might borrow money and then have to pay it back with interest. And some common examples of where this happens is a credit card. Now your credit card, you only pay interest if you don't pay the full amount that you've spent on your card by a certain date. So you don't pay interest unless you miss that payment. But many people do miss payments, and some people are caught in cycles of credit card repayments where they're paying a lot of interest. Another example is a car loan. Anyone who doesn't pay for the full value of their car, especially when you buy either new or used from a dealership, when you buy a car, you often get a loan. Very few people buy a new car just paying the total cost of it. Many people get a loan. And those loans, over the course of those loans, you get charged quite a bit in interest. Mortgages, when I see it spelled out, I always say it oddly. Mortgages is how you'd usually say it. You don't usually say that T. Tons of interest is paid on the mortgage of a house. A house that costs, say, $700,000, if you take 30 years to repay that house, you pay close to the same amount as in interest over those 30 years. So it almost doubles the price of the house that is what you pay in interest. And then finally, line of credit. You usually get this through a bank or your credit card company, and this is just it's basically like a short-term loan, and you pay interest on what you borrow there. So that's what examples of the interest that you would have to pay for borrowing money might come from. But there's also lots of times where you might invest your money in your life, which is like lending your money to a company or a bank, and then you get paid back with interest. So examples: savings account. Now your savings account pay very low interest rates, but you do get paid interest from money that sits in your savings account. Bonds, stocks, I'll say the stock market. And here, the interest rate isn't really an interest rate. It goes up and down. For a stock that you buy in the stock market, you can think of it like an interest rate, but really what you're getting paid in is based on the growth of a company. So as the value of a company goes up, it goes up by, say, 5% a year or 12% a year. Then the investors can make money back on their investments that way. So it's not quite interest, but it's similar, and the math would be the same.